Hi. As we all know and get excited about, Christmas is just around the corner. Choosing presents, decorating, and spending time with family and friends will soon be the thing to do. But let's not forget why you're watching this video. As someone who's always focused on gaining and maintaining financial freedom, you should always be open to growth opportunities. And, of course, we all love buying stocks and making a profit. But the problem is we don't really know which one to buy. Yes, of course, the best way to do it is to have your own research, to invest in what you really know, but why not have some ideas to start with? Anyway, what investment ideas do you have for this end of the year? Leave a comment on this video and let us know what you're up to. One of the first big questions is, when should you buy Christmas stocks? Well, waiting until Christmas to invest in equities that could profit from a holiday shopping frenzy is not a good idea. The start of the Christmas season is typically marked by Black Friday, the day after Thanksgiving. But given that markets are forward-looking and Black Friday discounts are sometimes built into stock prices, it may already be too late. You should consider purchasing these businesses sooner rather than later if you want to gain from a potential increase in stocks that benefit from the Christmas season. Even though Halloween and Thanksgiving are still some time off, purchasing Christmas equities now can help investors stay ahead of the data that has already been priced in. These equities gain from the excesses of the holiday season even if they aren't always directly tied to Christmas. Here are 5 businesses where customers will undoubtedly spend money this winter. Bear with me for the next few minutes and I'll show you 5 stock ideas you could invest in before Christmas 2022. Amazon.com, AMZN. Were you anticipating something else? Few businesses profit more from Christmas shopping than Amazon, where large numbers of people can purchase gifts, holiday decorations, and party supplies. Amazon offers goods of various types, whether they come from its own brands or from independent sellers that have online storefronts that are hosted by Amazon. Amazon Web Services also provides cloud, computer, and API solutions to organizations and governments throughout the world. With a market worth of $1.1 trillion, Amazon has one of the largest in history, and in only 4 years, it has increased sales from $232 billion to an astounding $485 billion. The company has a beta of 1.33, making it more volatile than the broader market but less volatile than you'd anticipate from a business with a 100+ PE ratio and rapidly rising rates. The stock was remarkably stable throughout the 2020 COVID-19 meltdown. For years, brick-and-mortar establishments have been losing market share to online retailers, but the COVID-19 epidemic has accelerated this trend. In 2017, there was a 50-50 split between in-person and online Christmas buying, according to Statista. But in 2020, 61% of holiday shoppers reported doing their shopping online, and even after pandemic fears subsided, that percentage only fell to 57%. Online shopping is thus here to stay, and Amazon is the party that stands to gain the most from it. Best Buy Company Incorporated, BBY. Speaking about businesses that have a strong online presence, Best Buy combines the advantages of both physical storefronts and robust internet platforms. Electronic and technological products from Best Buy include TVs, computers, laptops, phones, speakers, and video game consoles. Along with having a sizable music and gaming collection, it also features digital fitness devices like smartwatches, as well as home appliances including refrigerators, dryers, dishwashers, and vacuums. More than 1,100 physical sites are run by the corporation in the US and Canada. They also run the Geek Squad, a mobile tech support group that assists with the installation and maintenance of gadgets in homes and businesses. A number of factors make Best Buy stock desirable. The $14 billion market value is considerably less than Amazon's, but the company has a low 8.71 PE ratio and offers a dividend yield of more than 5%. The business has also increased revenue and profitability in each of the last 4 years. In November of last year, the stock reached its peak. However, since then, it has been reduced by 60%. When investing in BBY shares, have a plan for your entry and exit points because it is still a volatile company. Target Corporation, TGT. A company's tagline is always a positive indicator, and for most Americans, going on a Target run on the weekend is relatively well known. Target has 2,000 shops in the United States and is a general retailer of electronics, food, cheap clothing, furniture, and other goods. It offers everything from frozen pizzas to flat-screen TVs. Target.com has a significant online presence, and most locations provide curbside pickup. The 450,000-person corporation, which was founded in 1902, is well known for its Black Friday bargains and prices on well-liked Christmas toys, gadgets, and other goods. Target is one of the biggest retailers in the nation, With a market worth of $70 billion, a PE ratio of 17, and a dividend yield of just under 3%. With a beta of only 1.02, which essentially means it moves in lockstep with the larger indexes, Target has been one of the less volatile retail companies over the past 12 months. Although Target has increased sales and profits over the past 4 years, investors are still wary of the company due to a string of missed earnings estimates. However, a strong November figure might cause things to alter rapidly. eBay Incorporated, EBAY. In addition to being a global retail network that links buyers and sellers from all over the world, eBay is no longer merely an online auction site. Additionally, eBay also offers garments, gadgets, toys, sporting goods, and cars through its online markets, expanding its role beyond serving as a platform for second-hand and discounted items. Due to eBay's ability to connect customers directly with retailers, distributors, shopping channels, and catalogs, peer-to-peer sales are no longer the main mode of operation. Since its inception as an online auction site in 1995, eBay has grown to employ over 10,000 employees across a variety of digital industries. The stock has a $20 billion market cap and a low PE ratio of only 2.03. Even while revenue growth has slowed and eBay stock has dropped more than 50% since hitting an all-time high in October 2021, the firm has still beaten earnings estimates 4 times in a row. Etsy Incorporated, ETSY. Similar to eBay for artists is Etsy. Etsy links makers, designers, and other business owners with shoppers to sell their handcrafted or antique goods through a sizable online marketplace. Although handmade crafts and original presents are the main focus, ideal for the creative person on your list, Etsy also offers apparel, toys, furniture, party supplies, and equipment for designers and artists to create their own creations. More than 100 million things, according to the business, are offered for sale on its markets. One of the more recent additions to our list, Etsy had its initial public offering in 2015, yet it has produced impressive success. Since the IPO, revenue and profit have increased annually, and during the last 4 quarters, the stock has outperformed analysts' earnings projections. The market value of Etsy stock is $12.6 billion, and its PE ratio is little under 36. When intending to purchase Etsy shares, be careful of entry and exit points because the stock is volatile, beta of 1.85. So, these are 5 stock ideas you can buy before Christmas 2022. As I already mentioned, it's always a good idea to do your own research before making any actual transaction. Anyway, now that you have your Christmas growth ideas in place, you can go on and focus on the merrier part of the holidays. Don't forget to hit the like and subscribe button, and we promise that our next video will also come before Christmas.